Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. All right, folks, welcome to another great episode of We Build Great Apartment Communities, the only place where you come to learn how to take apartment buildings and turn them into amazing communities. So I am your host, John Brackett. Welcome everybody to the show. I have another great show here. I have two guests today that will help us really understand how partnerships should work inside of a multifamily investment. I think this is a great topic. I always have people reaching out to me, asking me about partnerships and leadership within partnerships and how partnerships work. But I think this is going to be a very unique opportunity because not only are these two brothers, but they both were also in the Air Force together, different functions in the Air Force, not the same base, but family business for sure, partners for sure. And so this is going to be a great conversation. So, hey guys, Chris Levarek and Ashton Levarek, welcome to the show, man.
Thanks for having us, John.
Hey, really appreciate you. Hey, so I'm going to invite you guys or invite our audience into this conversation by introducing you guys. I think it's going to be valuable that they get a feel for your background. So I'm going to start with Chris's bio. So Chris Levarek is a former firefighter in the United States Air Force, graduate of Arizona State University, and holds an information technology leadership role in the banking industry, and is a full-time real estate investor, managing partner of Levarek Investment Group. So since starting Levarek Investment Group, Chris has partnered with W-2 earners and fellow investors to achieve more choices and opportunity through real estate. Hey, Chris, appreciate you, man. Love you. Thanks for your service to this country and for helping me be able to do the things that I enjoy doing, man, because of the liberties that you and your brother helped create forward, man. So want to thank you guys for that. I think it's really important. So
Much
thank you, man. And then you're very welcome. And then Ashton is an Air Force Special Operations pararescue jumper, holds a BS in sports health and science, and a full-time real estate investor, managing partner of Volcare Investments Group. Ashton acts as the network facilitator and acquisitions lead for the Volcare team. So understanding that the whole is greater than the sum of its parts, Ashton is passionate about building a team of opportunistic, minded investors focused on creating equity, passive income, and generational wealth for everyone involved. Hey, man. So again, I just want to thank you guys for being on. Awesome. Appreciate your service to this country. And, you know, I come from a family of folks in the military. So I understand the sacrifices made, man, and have a deep passion, man, for our men and women that serve. So guys, welcome. This is going to be a fun one. Appreciate you having you on, man.
Thanks, John. It's a pleasure to be here.
Time, brother. Hey, so guys, why don't you start by, this is going to be kind of a cool one, right? Because I get a lot of messages to me requesting various aspects of partnerships and how to partner, how to select partners, when do partnerships work, why do they work, some really interesting questions. Now, we're going to use this show to debunk a lot of these questions and hear it from folks that are actually doing it. And this is kind of a unique situation because not only are you guys partners, but you're brothers, but you have really clearly defined roles, right? So can you talk a little bit about your backgrounds and then how this partnership started? And then we'll get into leadership and the roles.
Yeah, so how it started. So Chris and I, back in 2018, we were looking for, actually Chris brought it up. He brought up real estate and it kind of clicked when we started talking about it. And we've always been pretty close. We've always had, you know, we talk to each other frequently. So when he started talking about that, I had heard about it before and it kind of made sense. And I'm kind of that guy that just jumps in without a lot of research. I like, if it looks like a good idea, I go for it full steam.
I like it.
And that's kind of what happened. So Chris had been doing all this research and he presented the idea and the model. And I was like, look, I'm 2 years away from retirement. I've spent 20 years in the military, 250 days a year on the road away from family, either deployed or out training or whatever. And that sounded awesome. Financial freedom sounded awesome when you think about it like that, right?
Right.
I get to dictate my own schedule. I get to be home when I want to be home. I get to go on vacation when I want to go on vacation.
Man, you said 20 years, man. You look really young. You look Like,
I
geez, I
appreciate that.
thought when you said you were still in, I thought like maybe you started like 5 years ago, man.
No, I appreciate that. Yeah, 20 years, going on 21. I
Give me some of
joined the
that
guard.
special sauce,
Yeah.
man.
I drink a lot of water. Yeah,
You're classic, classic.
yeah,
Go ahead, brother. Go ahead.
yeah. So that's kind of where it started, you know. So back in October of 2018, we got our first small multifamily under contract, and it was all because we wanted to create more time in our life, you know, be more efficient with our time. So instead of trading that time for money, which, you know, everybody's so accustomed to and conditioned to do ever since they go to school, you know, or get out of school, like
Right.
trade time for money. And the more time you give, the more money you should make. Well, there's other ways around that. And so that's kind of what we started looking at. And yeah, from there, it just blew up. We just started seeing opportunity after opportunity as we learned how to better position ourselves and better partner. And then the roles morphed into what they are today. Partnerships changed. Did deals change? I mean, it's been a process. The business has expanded. It's been awesome. And we've enjoyed every minute of it. I mean, Chris, there's anything you want to add to that?
Yeah, I just kind of want to touch on your original question, how the roles got to be what they are. It doesn't happen overnight.
Yeah.
I think you can start understanding what you can bring and what your role is early, but you know, you don't really know what a partner can do until you start working together, or until, you know, maybe if you both go do some kind of analysis together. But we actually thought we were very similar in the beginning. And in fact, he's my older brother, so I was copying a lot of what he was doing when we were younger. So, you know, he would go in the military, I'd go in the military, he'd do physical, I was a firefighter. And, you know, I found out slowly, like, I'm actually a lot better at some of these, you know, systems oriented IT. My career blew up. I was amazing in IT. I wasn't a bad firefighter either, but I found out I didn't enjoy it as much.
Right.
And so, you know, that kind of transition, we found that out as we started working together. We said, you know what, I like this and I don't like this. And it seems like you can do this really well and you're just enjoying it. So here, you have that and we all have to take this. And that's kind of how the roles started developing. And I think that's how most partnerships start. I mean, you don't always know what you have right away unless you fully map it out and you really have that intro discussion in the beginning of a partnership. But once you start seeing the different needs and then you see the different strengths of the different players, that's when it really starts to grow exponentially.
Yeah, I really like that, man. But you know, it also takes a lot of trust, and it also takes a lot of maturity and humility to be able to relinquish control of either what you're not good at or what you think you're not good at, right? That's something that doesn't come naturally to people. I know it didn't come naturally, you know, to me, man. And I'm just being really candid about that. It took me a while to develop that. And so I really appreciate you sharing that. So based on what you said, you know, Ashton, you mentioned a couple things that caught my ear, and that was, you know, things just started expanding from there. So where was the point where things started to pick up, you know, for the both of you, for your company?
Yeah, so that's a great question. So Chris and I, yes, we've been very close over the years, but we're also very competitive. And at the beginning, it was like, you know, I don't know, who could be the better analyzer, who could find the most deals. We never came out and said that, but that's kind of what was happening. Chris would analyze a deal, and then I was like, I got to find a deal. I go find a deal, and then it's kind of went back and forth. And so initially, we thought we had to do everything, right? And the other thing that happened was, being as competitive as we are, we're always seeking to get better. So we started reading and listening to podcasts and just crushing all the material we could come upon, right? And
I love that, man. I love that.
Yeah.
Let me just say something, man, because the way that you're talking, I'm getting all excited, right? Because I'm the same way, man. And I think it's kind of a shame that today it almost seems counterculture for people to talk about competition in business, right? And I don't think that should ever leave business. I don't think it should ever leave who we are as people to begin with, because
Absolutely
it's part
not.
of who we are, right? But so anyways, man, I appreciate you saying that. I'm getting all excited over here. So go ahead.
Well, just to your point, I sometimes say, like, so I grew up playing a lot of sports. I, you know, fight, I do all sorts of stuff, and I love winning. And I think, you know, making money and finding deals and completing a project, that's the grown man's trophy. You know what I mean? So
I always say business is my new sport.
there you go. Yeah. Yeah. So anyway, we came on, I mean, there's a ton of great podcasts out there. I won't go into all of them, but a couple books were really pivotal in how we structured our business, how we found our positions in the business, our roles, and how we developed our values and where the business was going to go. And I mean, the first one I'll mention is traction. And Chris and I have talked about this ad nauseum with multiple people. I mean, if friends and family hear this podcast, they're going to be, oh, they're going to talk about traction, of course.
Why does that book stand out so much?
Because it is a roadmap for a business. And he goes over like why it works and who's usually in what role and why that works so well. And we're actually working on an ebook now just to outline this and how to formulate your partnership so that you can be the most efficient and productive with your partnership, with your business, all that stuff. So if you haven't read Traction, I know I'm hogging it, Chris, I apologize. But if you haven't read Traction, like Chris and I are like almost to the T exactly who he describes for every major successful business, from Walt Disney to Ford Motors to Macintosh to, all those. So there's usually a visionary and there's usually an integrator. And the visionary is the guy with the big picture idea and he wants to go there, but he has no idea how to get there. But the integrator is the guy who puts all the systems, the process, he builds the path there. He's the one who sees all the details. And like you said, it is humbling at the beginning because you're kind of like, yeah, I love all those ideas or all those aspects of that role. But at the same time, I don't think on these other aspects. But the more you embrace it, the better your business will run. And you'll see that you actually excel at certain things within that role. And that's where Chris and I found ourselves. So the visionary, the integrator. And I mean, it took off from there. And then the follow-up book to that is Rocket Fuel, another great book that talks about how those two roles work together. But on top of those, we also did the DISC profile, and that helps solidify what roles we fit into. And it's basically a personality test for the workforce. Tony Robbins is a big promoter of it. It's really good.
Yeah, no, it's good.
But,
I agree.
Yeah.
Good product. We use that for all of our hires, man.
Yeah, same. Yeah.
It makes a really big difference. It really does. I think it saves time. So, all right. So let's hear from Chris. So Chris, share your perspective on that topic, man.
Yeah, I mean, so the minute we started figuring out what we were good at and which roles that we aligned with, and reading Traction really set us up because it is a blueprint to build a business. You may not have all the roles right away, and you may not have all the players that you think you need for your business, but you can kind of digest, what you're good at, what you're passionate about, and what you like doing. Well, that's kind of the same thing, but what you're good at and what you like doing. And if you can work in that area and then find someone else to fit the areas you don't like working in, that's where you really start to excel. Once we made that adjustment, we started with duplexes. We got into a 5-unit, we got to a 13-unit, and then we scaled and we're at about 246 units now with different apartment complexes in the space in 3 different states. And that's in the space of a 2-year span. And it wasn't a race, but it's about finding that secret sauce to success kind of. And a lot of it has to do with partnership and understanding you can't do it all alone. You can do it all alone, but you're not going to do it very well. And even if you bring on someone who helps you be more productive by 10%, that's going to make your business be that much better. So, that's kind of how we did it. We found out what we were good at. And it is not easy. Sometimes me and my brother, we'll argue about different things because I'll be like, look, you're just throwing 20 ideas at me. Let's stop and digest one and work on it and get the detail to it. Right. But you need that, right? And sometimes that's not going to be easy for someone like my brother to take, because he wants, he's like, oh man, I got to slow it down, like this cat telling me to, be quiet. So he's my younger brother. So sometimes it's not going to be taken well. But if you really want your business to grow, you do have to kind of like take a step back and be like, okay, what's best for the business at this point? What's best for the goal, the priority? And yeah, it takes trust. It takes working with the right people and it takes a little humble taking the ego back a step.
Yeah, for sure, man, for sure. So the 200 units, okay, I'm going to try to talk about this in a way that our audience will be able to understand. So inside of how you communicated your roles, right, and some of the challenges, some of the opportunities, one of the things that you said is, hey, we had to find ways to be able to partner to scale. And so when you talk about partnering to scale, was that bringing on, outside of the partnership that you have, was that bringing on additional employees, right? Or does that mean that you were able to seek out other people that had a similar vision and maybe similar values and joint venture with them to accelerate your growth? There's 2 ways that are fairly common in this industry, right? You joint venture with other folks, or you hire, right, and you grow that way, or you do a combination of both. So can you talk maybe
Right.
a little bit about that?
Yeah, we did kind of both directions there. So right from the start, every duplex we started with, we partnered with other investors. So playing the role of, capital was always even a partner in our projects. As we were investing out of state, we needed out of state project managers. And so once you got to the bigger properties that we ended up doing, yes, you definitely needed partners. We needed people in those states to play a more significant role, and they needed pieces of equity or pieces of general partnership in order to be willing to do that right away. Because, when you're starting out and you're doing a value add project, the first couple of years aren't always going to be supplying cash flow to the managing partners. Most of the time, they'll go straight to the investors as you get that property stabilized. So that requires a general partnership. When we started out and we started doing these bigger 5-unit, 13-unit, 16-unit, we were doing all the asset management. We were doing all the capital raise. And, we were working with a property manager, but you still got to manage the manager. And then all the investor relations, the distribution, it doesn't stop after you close the property. So there was wearing a lot of hats. So we did, at that point, that's kind of where we went that direction. We hired internally. We brought in virtual assistants. We still have a couple of them with us today that have just done awesome in the company, and they've taken over a lot of the gaps that we don't want to do necessarily, and we're not able to do as well at this point because we're focusing higher. So we partnered in that direction. And then as we went to the bigger deals after that, we realized we needed to go bigger. We need to niche down our own company role and then find other companies that could play in the general partnership, maybe just the key role of property management, maybe just the key role of asset management, maybe just the key role of deal flow, of acquisition. So that's kind of where you start to get those bigger partnerships down, and you're able to focus really and become a master of your own specific niche in a bigger partnership like that.
Okay, cool. Let me clarify some of that. So when you talk about partnership and niching down, so let's use the property management company as an example, right? So talk about the equity share there. What does that look like? Can you elaborate a little bit on some of the equity share components?
Yeah, sure. So typically, like when you have a property management company, they're going to get on a bigger property, they might be getting, 4%. It's not going to be, the smaller the deal, you're going to be around 7 to 8%, 10% for property management of the income that's coming in. So in this case, when you go into bigger properties, there's more income coming in. So the percentage will drop to 4% or, 3, 2%. You can incentivize, well, let's say if you have equity on the deal, you could include a property manager as a general partner on the deal in order to not only give them a piece of the pie, but you're basically saying, look, this is your baby too. You're not just getting the fees. You own a piece of this equity. If this property does good, you get better return because you own a piece of the equity. So by including that person or that company in the equity as a general partner, instead of just as a kind of contractor approach, you can get a lot of better performing property. The units will get turned a lot faster. They'll be better taken care of. So we've seen success in that and had a great partnership at the same time.
Okay, cool. So I'm going to play devil's advocate a little bit. Okay.
Sure.
All right. So, many years ago when I was in banking and when I got out of banking, so one of the reasons why I left banking was ownership in another bank, right? And so one of the conversations or something that I saw there was, you can give someone equity in a project or in a business or in a company, but if they're not very motivated to get something done, right? Equity is not going to solve that problem regardless, right? I mean, and that's one of the challenges when you're starting a partnership where you're inviting somebody into your partnership without really having a track record or having some level of performance with them. Because it's almost like you're saying, hey, look, let's get married first, and then I want to see how you perform. Unfortunately, it's very difficult to unwind some of that in an operating agreement unless you are really thoughtful in how you craft that, right? So how do you deal with that issue?
Well, there's a dating period, right?
Yeah.
You don't just ask.
Okay. Gotcha, man. I got it. Okay.
I mean, I don't know. I've never done that. We've always, that kind of stuff happens on its own. It's been, we're out there looking for people to partner with, but we're not out there asking people to partner with us, right? We're actually meeting people, networking, talking about what we're doing, looking what other people are doing. If we can fill a role for them, how can they fill a role for us? I mean, it's a give and take, right? It's got to be mutual. It's got to be, I mean, I think some of our biggest partnership to date, it took like 8 months of constant conversations and meetings and stuff like that. And that was all on its own. It wasn't because we were looking for a partner. It was just because we like these people. You know what I'm saying? This is not,
Right.
We're not out there like, hey, what can you do for us? Nah, never mind. We'll talk to somebody else. It was more just like, oh, I love what you're doing. And we're bouncing ideas off each other. And then 8 months into it, he turns around. I now call him a friend. He's a good friend of ours. Turns around and say, like, hey, look, I got some big deals coming down the pipe. Would you guys be interested in helping me out on that? And then we turn around and start talking about it. And like, is that where we want to go? Is that what we want to focus on? We like these guys, their values, their goals, their vision is very similar to ours. Is that where we want to go? And that's it. And it wasn't like overnight.
8-month process. Yeah.
Yeah.
Okay, cool.
I would definitely warn anybody that jumps into something or offers you to jump into something. But
I think that's really good feedback, man. So you talked about vision and values and the commonality around vision and values, right? And so I know with Special Forces, one of the things that they're really good at, man, is getting you to understand what your creed is, right? To buy into a creed so that, hey, you really are clear about who you are, okay? Especially within that unit. So what is your vision for your company? And what are the values that you've established thus far, to be able to move that vision forward, right, consistently, to be able to support that vision forward? Because one of the things, man, that took me a while to figure out, and I'm sure a lot of it had to do with the fact that I'm a little bit older now, but, I just turned like 28, right? So there's value in being really clear about what your values are. Because when things get a little shaky, which in real estate, they almost always do, because it's just not a perfect business, right? It's being influenced by people. Those values can help make decisions, I don't want to say easier, but they can just create clarity around decisions, which I've had to do actually this year. So can you talk a little bit about that? What is your vision? What are your values?
Yeah, so I think anytime you run into a problem about your life, where you're going, what you're doing, it's about clarity. And we touch on it. Everybody touches on it. They don't really neck down on it. And that's why we recommend traction so much, because traction's huge on that. Getting clear about where you want to go. So I'm kind of beating around the bush to answer your question, but we're huge on clarity. So where do we want to end up in 3 years? Where do we want to be in 5 years, in 10 years, right? And then how do we know we're on track to get there? That's how we figure out our steps to get us there. And that's how we figure out who we want to partner with. And then it comes down to, like, as far as values, I mean, do we trust them? Are they doing the same thing, that we're doing? Would we do the same thing in their position? Yeah. So, everybody's got different values. We value family above all. We value our time. We value honest, open relationships. And really, we value having a good time while we're doing it, because we're not here to create another job. We're not here to create another 9 to 5 that we hate, right? We're about having a good time. So if we're not working with the people we like, if we're not actually doing things we like, that's what's one of the things we value. If it wasn't working, we would go do something else. And that's it. So we value family, we value our free time, we value happiness above all, right? So when we line those up, that's how we find our partners. That's how Chris and I developed our plan. We look 3 years in the future. Where do we want to be? How much money do we want to make? What does that look like in using the real estate strategy? Because there's 101 strategies to get there. And then make sure that we're on track. So we check in every 90 days. We do 90-day sprints. And that tells us if we're on track to hit our 1-year goal, to hit our 2-year goal, and our 3-year goal. And being absolutely clear about what you want is the key to that. And so we look at clarity, commitment, and what are you doing daily, right? So if you want to know what somebody's about, look at what they're doing. They can talk all they want, but if it's not backed up by their lifestyle, how they're living, what they're doing, and today's social media is like a great window into people's soul. If they're complaining about the president all the time, nope, don't want to do business with them. Not because about the president, it's just like, that's not what we're interested in right now. We're interested in doing deals and creating happiness and creating time. Like, that's what we're about. And so you get clear, you commit to that end goal, and take action daily. And you can look at somebody and see where they're going just based off what they're doing daily. And that's how we line up.
Okay, cool. So let's talk about the 90-day sprint, right? I'm a big fan of that. I'll tell you a really quick story. This was last year. I got invited on, actually, was it last year? Yeah, beginning of last year, or maybe it was the year before that, latter part of that, to have a leadership conversation at WD-40, okay? And they had all their rising stars, right? Their rising leaders. And they were gracious enough to invite me in there. For one, I didn't really know that it was going to be that. So I was a little surprised when I got in. Yeah, I was a little surprised. But very kind of interesting, right? Because one of the topics that came up for me was, how do we plan out our year? Okay. And I told them, which was probably completely contrary to what they do, is I said, man, we don't go beyond 90 days. I said, anything beyond 90 days is just a waste of time. And it got a little quiet. And it's probably because they're doing these like 12-month plans, 24-month plans. But the reason why I said that is I go, look, what I'm more focused on and what I'm more focused on communicating with my team is how we adjust along the way, right? How do we make adjustments along the way? That's where the win is. Because business is never a straight line, man, just like life, right? It's not a straight line. But there's some skillfulness in how you make adjustments as you go forward. And I'd rather put time and energy into getting really great at making adjustments versus being really good at planning. So, I really appreciate that. So can you talk a little bit about the 90-day sprint, man? Because I think there's massive, massive value in that approach.
I mean, yeah, basically we look at our 3-year goal and we work backwards from there. So I like that term, win, what's important now, or most important next step, MINS. Like, that's how you decide what you're doing that week, that day, right? I think Chris is really good at talking about all this. I mean, he crushes the time blocking, if you want to get into that. But yeah, that's basically it. Like, we're looking at, okay, so, I mean, we could talk about key performance indicators, right? I love that one too. If you're always looking at the end goal, how do you know if you're going to reach it, right? How do you know if this step is actually getting you there? I'm a sniper in the military. I shoot a lot. And if you take a shot and you're off by, 1 millimeter at 100 yards, you probably still hit the target. But once you get out to 1,000 yards, you're way off,
right?
Because how it deviates. And that's the same with your goals. So how do you measure those steps every day to make sure you're on track? Well, you have to figure out a measuring stick. And so you have to actually build those steps into the process, into your end goal. And that starts with looking at the end goal and working backwards. We love backwards planning in the military. Always look at the target first, and then what we're doing there and how do we get back, all the way from base to target. But that's really what it is. And it starts with today. And if today the most important next step is to get educated on multifamily investing, then go get a book. Maybe your most important next step is just to make a phone call. Maybe your most important next step is to listen to a podcast. Maybe your most important next step is to make $1 million, $10 million offer. I don't know, but it just depends where you are. And that starts with being clear about your end goal. But the 90-day sprint is awesome because, especially if you work with a team, who's keeping everybody on track, right? Because at some point, if your mission statement, if your vision is not clear, people start working a little bit away from where you want to go. And if you're not rechecking in 90 days, like, where are we? Have we met it? Are we meeting these goals? You're going to end up a bunch of people spread efforts, not getting you where you want to go. I think.
Yeah. So usually, to your point, man, we're checking in every week, right? And we're making adjustments every week. So we set up targets, outcomes targets, and we every week figure out where we are to that target. Where are we relative to our outcomes? What do we need to make? What adjustments we need to make? I think, man, there's massive, massive value in what you just described, because I'm a huge proponent of that. I mean, it doesn't matter if it's a sport, right? If it's a physical outcome, if it's a business outcome, if it's a family outcome, to me, it's all the same, man. It's targets and outcomes. And I think it's a manageable way to achieve, right? Otherwise, to your point, you're just throwing darts, man, and living your life. I tell my kids this, indecision, not doing anything is not a decision, right? You got to make decisions, and then you have to adjust along the way. So I'm huge, man, on what you just said. So Chris, can you elaborate on that, man? I'm really curious to get your perspective. This is cool because I can talk to Ashton and he gives me one viewpoint. Then I turn around and I talk to you. You give me one viewpoint. It's like two for the price of one, man.
Awesome. Yeah. Yeah. To wind it back, I mean, it's doing it in a 90-day, and you come up with like 3 to 5 objectives that you want to achieve in that 90-day. And then you have your team, you know their strengths, you know how they're going to all participate in that 3 to 5 objective. And so you'll break down those objectives into weekly tasks or weekly things that you're going to try and aim to get done. And we're evaluating every week. We're checking. So, if we were developing a criteria like we just did, we closed the property early November. So we have this gap now that we were filling. Before it was different criteria, but now we're kind of a partnership criteria. So we might back that down from 60 days if we have 8 weeks. The first week, maybe we're deciding, what's our business doing? Where do we want to be? What's our niche? And what is our strength? And then, okay, what are our weaknesses? Okay, so we're looking for partners with these weaknesses. Okay, if those are part of developing the criteria, maybe that's week 1, and we'll break that down into week 1. Did we hit it in week 1? Did we not? And you kind of break that down into chunks that you can do to overall hit that objective in that 60-day or 90-day mark, for example, to get a business partnership criteria defined or a standard or whatever that might be. But you can do that on any kind of objective. We have Monday.com. We use different tools to track it, Excel spreadsheets you can, of course, use to do that kind of stuff. But
oh, man, I forgot you're the IT guy.
Yeah. Yeah, I am. There's a lot of tools we use now.
Yeah,
I'm trying to slow down, but
hey, I really appreciate that, especially you sharing some of those tools, right? I think there's a lot of value in that. So guys, this has been a very cool conversation. So now what I'm going to do is I'm going to ask that we transition a little bit and get into, Ashton, one of your favorite topics, which is creating profit. Making money, man. At least that's what you shared with me, right? But let's make some of this stuff real for our audience, right? So let's use some real examples. So maybe what we do is use this 90-day planning model, or I like the sprint. I like what you called it. You call it a 90-day sprint. Like that even better. Let's use the 90-day sprint challenge model. And then inside of that, let's throw in a deal that you either recently have done or that you've closed on, but we'll use the 90-day sprint. So what did that look like, right? If you can kind of talk through the 90-day sprint, maybe what we'll do, because I think now I have a good feel, man, for how you guys work in your roles. We'll start off with Chris helping to explain the 90-day model with that one example. And then Ashton will come in, man, and sprint us to the finish line and talk about profits.
Yeah, sure. So let's do it. So if we were doing a 90-day model and we were closing on a property, and that's a great time frame because, 90 days, your typical property is going to take 45, 60 days to raise, and maybe you're putting a 30-day extra due diligence closing on there. So it's a great time frame if you got a property every quarter. But how that might look, in our case, our business is very focused on investor relations, on raising capital, on finding deals. But, sometimes we will let the deal, we'll come in as the partner to a deal that's already been found. But so if we were raising capital, for example, as our goal for a 90-day goal, and we had just recently we did 1.25, for example, on a deal, million. So if we were going to do that, something like that might look like, okay, well, in order to raise 1.25 million, and depending on how much you're taking per investor, you would just divide the amount of investors you would need or want to include or find for a deal like that to get the 1.25 million. And you would chunk that out. So if I need 100 new contacts and I think I can talk to 50 of them, maybe I get 100 new contacts, maybe I only talk to 50 of them, and maybe I only get a proposal signed by 25 of them, and maybe 10 of them invest. Well, hopefully those 10 are investing 100K to get me to $1 million. That might be some kind of way that you chunk out that 90-day target goal.
Right.
How can you analyze that? Right. Yeah. In week 1, did I talk to, 10 contacts? Or if I have 90, however many weeks, did I talk to as many contacts as I need to get to that amount? So that might be one way you chunk it down.
Awesome, man. And then, so Ashton, can you talk about how you, inside of that model, right? You're likely on the phone a lot, moving people to the finish line, getting them committed, making sure money is in the bank. Doesn't count, man, unless the money's in the bank, right? And then, of course, having to fund the deal. So maybe since Chris, man, gave that great picture, talk about a deal that you acquired, right? What the metrics look like, and then, how you underwrote it, why you decided to pull the trigger on it, and now you have the capital to essentially bring to it and fund it, right? At least the equity capital. That way this becomes real and tangible.
Okay, so I could talk about, we did an 84 unit 3 months ago, and then we just closed on a 120 unit last month. So either one of those, but those were brought to us by another partner. This is a gentleman we were talking about earlier. But yeah, he brought that to us and he said, hey, will you help come in as general partners and help push this one to the finish? And that's what we did. So he had already underwrote the property, both of these, and he had already got it under contract, made an offer and got it under contract. So our job was to help with due diligence and to help bring the capital on both of these. For the 84 unit, what was it, Chris? Like 4 million, I think?
Yeah, it was 3.4.
3.4 million?
Around there.
Okay. I don't remember how much we brought. Well, actually, here's what we did. And we like this a lot because if you are building a partnership, this helps. You get to keep your relationship with your investors. So we built a fund so we could do both deals at one fund. And you're going to have to talk to a syndication attorney on how to set that up specifically. But it is a syndication. It is a private placement memorandum, and you get very specific. I mean, you can be very broad, but investors are going to want to see it very specific. So we showed exactly how much the returns were going to be. We wouldn't buy a property that wasn't going to hit those returns, that wasn't going to hit that IRR, AAR, all that stuff, right? So we were very specific about that. So everybody knew what they were getting involved in. And the capital raising in itself, it's a year-long thing. It's not like, I know Chris was saying like, yeah, we turn around, like how many people do we need to talk to raise it? We're always talking to people. We're always building these relationships. That's something that we're always doing. But let's see, in a 90-day sprint, it was about, we had wickets we had to hit, because how do you get a lot of information out to all your whole network without having to call every single person in your network?
Right.
So
that's smart, man. That's really smart.
I wish I could say I came up with it. I didn't.
But meaning it's a smart transition because it's just the reality, right, of what we have to work through.
Yeah. So one of the things we looked at is what other people were doing. We're not trying to recreate the wheel. We're trying to make the wheel go faster. That's it. So we built webinars. So when we get something under contract, we know that the very first thing we need to do is start building that webinar so we can do a live webinar with our network as fast as possible. So let's say in a 90-day sprint, we just got something under contract. We're going the full 90 days to close. The first thing we're going to do is we get all the underwriting settled, we get the due diligence started, and maybe these are the top 3 things we do that first week. We start the due diligence, we start working on our webinar. And we've outsourced for our webinars. We give them all the information from all the underwriting to the market evaluation to the team members involved, all that stuff. And then they build us basically a slideshow and we do a live webinar. And it's very simple. It's very straightforward, but people need visuals. People need to see what they're getting involved with. They want to see the people involved. They want to see the market involved. And I don't blame them. I'm the same way, right? You get on there, you want to see what have these people done in the past that makes me think that I should trust them with my $50, $100, $200,000, $1 million, whatever, right? And rightfully so. I totally agree. So that's what we do. We present who we are, what we're doing. And by then, most people know who we are, but they want to see like the actuals, right? So we have a lot of pictures, at the very end, we get into the underwriting. We keep our underwriting really simple. We're not huge into the complicated waterfalls and all these different ways. We like to keep it as simple as possible. This is your preferred return. This is your return over 5 years. We plan on refinancing or plan on selling in 5 years. And we just show that plan. That's it. You're showing your business plan, right? We're open. We're honest. We're not going to beat around the bush. This is what we're doing. We're going to do this in 5 years. Let's set up a call. And that way we send people these invites. Usually it's, I don't know, Chris, what was it like? We finished the webinar and the webinar was going to air in like 2 weeks. So people have time to set that time aside. And the great part about it was we made it so, and this is again, I take my hat off to Chris over and over during a lot of these podcasts because he develops a lot of these processes. So we do the webinar, but he made it so that very simple to do, I'm sure, but for an idiot like me on computers, it's tough. But anyway.
Hey man, but you're great with a rifle.
Yeah, there you go. I'm a people person.
Yeah, there you go. I like it.
But, so you sign up for the webinar and you get a live recording, whether you attend or not, right? And that's it. And so then now we have something that we can repeatedly send out if people hit us up about what we're working on right now. And it makes it really simple. It's streamlined. So now what are we at? We're like, so first week, develop the webinar. Maybe that takes 2 weeks to get everything done. And then 2 weeks later, we're actually presenting that webinar. So that's 1 month in. So now we have 2 more months, right? And the whole time, our property management, our contractors, all that stuff, all those people, we are simultaneously going to the property, getting the due diligence done, walking the property, getting pictures, doing videos, all that stuff, right? And a lot of this will go into the webinar itself, but it's important that you get all that front loaded because, you don't want any of that information coming up later.
Sure.
That you didn't know about or whatever, right? So that's kind of like the beginning of the 90-day sprint. That first month is preparing everything to get ready for close. Yeah. Chris, you want to talk any about that? Did I miss something?
I mean, just legally, I just say too, like it's the big part, like I broke it down really basic, but a big part of it all is, in syndication, especially if you're working with, sophisticated investors, you want at least 30 days of knowing them, of having that existing relationship. And so part of ours is we don't send deals unless you are on our list and we have been there for 30 days. So there's different scenarios that come in there that will protect you in a legal issue of some kind if the SEC is doing investigations like that. So to say that we go talk to someone at day one and then they invest 30 days later is probably not exactly that way, but it's good to build that list beforehand, and then that way when that 90-day sprint comes to raising capital, you're ready to go.
Yeah, that is good to bring up because yes, we are not, when I say we are raising money in 90 days, it's not with people that we've never worked with or talked to before.
Sure.
Yeah. So, but the point is like getting that message out there to your whole network. I mean, if you're doing stuff like this, you're probably working with a large network of people. And if you can, how do you set up all those phone calls? How do you consolidate all those people so they can get all that information ahead of time? We found the webinar to be one of the fastest ways to do it.
And what do you guys use? What product do you use?
Well, we just got a really cool one that I'm loving is Active Campaign. I don't know.
Oh, Active Campaign is really good. Yeah.
Yeah, that's fun. We've done a couple of different, we're of course using Zoom. We get the webinar Zoom feature for that, but we were using Pipedrive to coordinate a lot of the kind of flow of talking to someone, how that process flows. It's just a pipeline and you just move the deal forward, kind of like a Kanban board, or if you're familiar with those. But yeah, and we use Monday.com for project management, but I'm moving everything to Active Campaign for contact and overall automations.
Does it have a webinar feature built into that, or do you integrate that with Zoom?
So we'll integrate it with Zoom. So when the recording with Zoom is done, I'll grab that link. We'll throw it in a campaign. We used to use MailChimp. Now we're using Active Campaign. We'll throw it in a campaign that has an automatic list attached to it. That list is everybody who registered, for example. And so that campaign will shoot out the link, makes it look all fancy, throw images in there and all sorts. So
really cool, man. Well, guys, we're at the end of our show, man. We're winding this thing down. I got to tell you what, this has been an amazing conversation, right? Because very unique opportunity to speak about how to partner with two people that are doing it, but are brothers with very, very similar backgrounds, right? I mean, it's kind of cool. But I think one of the things, man, there are many takeaways here for me, but a couple things that you guys talked about that I see really clearly is that you've clearly defined your roles, right? And I think in your case, a little bit of an advantage because you two have known each other for many years. So I think naturally you kind of knew where those strengths, maybe you didn't know it. Maybe you couldn't come up and say, hey, look, you're going to do X and you're going to do Y. But I think over the years, you two have kind of grown to know each other's strengths. But I think you've done a really good job of explaining how important it is to have very clearly defined roles, but having humility in that, I think the only way a partnership works profitably long-term, man, is if you can have some humility and know when to let go of things, right? Not necessarily know what to hold on to, but to know what to let go of. At least that was it for me. And man, you guys have done a great job of explaining that. And then Ashton, man, you've done just to add to that, the importance of having a clear vision, having clearly defined values, which Chris also touched on, and why that's important. And then above all else, Kate, to have absolute clarity to make the engine move forward, right? Without a vision, man, the people shall perish. It's really evident, man, that you guys have done a really good job of understanding your vision. And then, of course, how to align yourself with people that have a very similar vision to you and, of course, similar values. So huge takeaways there, man. The 90-day, did you call it a sprint or a dash? The 90-day sprint, man, I love that. I'm going to call it the 90-day sprint challenge. I'm borrowing that one from you, man.
There you go.
But I really like it. But that's also a really big point, man. I think there's huge value in breaking things up into 90-day chunks. And I'm going to use your term, the 90-day sprint. Big takeaway there. So guys, this has been a great conversation. Really appreciate having you on. Also, man, thank you so much for, your service to this country. Oftentimes, man, I always tell people it's very difficult sometimes, I think, to appreciate the amazing freedoms that we have in this country unless you leave it. Because I tell my kids, this is not normal, right? Therefore, do something with it, because this is not normal. I mean, you go travel around the world, man, liberties that we have, they're just unbelievable. And so I think perhaps, the greatest way to contribute back to those men that have gone before us is to do something with the freedoms that we have, right? So for that, guys, I want to thank you. Humbled for you being on the show, man, and doing all this cool stuff that you're doing. So before I ask our audience, man, to how they can reach out and find you guys, what is the one question that you have for me that you think can add some value to our audience? Since I've been asking you questions, man, for a good 45 minutes.
Ooh, I don't know. It's a good question. How long have you been doing the podcast?
Let's see. I've been doing the podcast for about 5 months now.
What drove you to get started? I bet you get that question a lot because
I do.
A lot of people want to know if they should start a podcast, right?
Yeah. So the reason for the podcast, really, it's an extension of our purpose in our company, or as you put it, our vision, right? So our purpose is to build great communities and improve how people live. So the name of the podcast is We Build Great Apartment Communities, right? And so for us, I've been communicating that vision to our teams now for almost 2 years. So my hope is if that someone called them up and said, hey, what is it that you guys do? That would be their response. But I think what I have seen, though, is that when you put people first, you just operate more profitable companies, man. And I think we've been able to prove that out. So for me, it's not a maybe anymore. That theory is no longer a theory. And so this really has been an extension of our purpose.
What's your strength in the company? What's your role? Where do you excel?
Yeah, my greatest strength, man, is just finding a way to get to the finish line. Just finding a way, I am a numbers person, but I also love to interact with people. And I find a way to make those two work. Almost every day.
It's good.
But I think above all is, irrespective of the obstacle, as long as it makes sense to pursue, I'll find a way, man. I'll find a way.
Nice.
Yeah, that's not two skills you have. Yeah, common skills that go together. Really good at numbers and people person.
I appreciate that. I don't know. I'll just take that as a compliment.
No, it's absolutely a compliment.
It is a compliment.
I appreciate it, man. Well, guys, you've been tremendous. Really appreciate having you guys on the show, man. How do people find you guys? What's the best way for people to find you?
Yeah. So the best way, go to the website, valkyregroup.com. It's spelled just like you can see on the image. If you're listening to an audio, it's VALKERE group.com. Everything's there. We've got an ebook. We've got a blog. You can contact us. Our social media is on there. We're on LinkedIn, so you can reach out on LinkedIn. We're on Facebook. We're on Bigger Pockets, any of those. But if you want the easy way, just go to the website, valkyregroup.com.
We also host a virtual meetup. Now we have different guests every month. Just drink a little whiskey, talk some real estate, some wealth creation.
I love it, man. Whiskey.
More than you make.
As soon as you mentioned whiskey, my ears perked up. Like, what?
Come on, John, bring it on.
I have this theory that they don't make whiskey men anymore, man. Diminishing. I'm going to edit that part out.
You got to stand by your guns.
I always find a way to get myself in trouble. But let me know. I'm happy to join, man. Happy to join.
Yeah. Awesome. Love to have you.
Hey, guys, really appreciate you, man. Thank you so much. I want to wish you guys continued success. Look forward to another conversation when you're at 2,000 units. And I'm sure that's going to be very soon. So thanks so much, guys. And keep crushing it, man.
Thanks, John. Appreciate it.
Anytime, brother. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.